During September and October and November, in the meantime, the economy added over 112,000 jobs, with 63% of these being added in November alone. This has reversed the decline of over 82,000 jobs shed in the 4 months through to August. Jobs growth occurred in all sectors, but temporary work continues to outperform other categories, growing at a rate of 13.2% during the November period. Joining us for a look at the unemployment rate and the employment numbers that have come through is Loane Sharp, Labour Market Analyst at Adcorp. Thanks so much, Loane, for joining us today. Well, pretty encouraging when you're looking at things on a headline basis. We've got employment up 4.4%. Your reading of the numbers, just how optimistic does this make you about the road ahead?
This is the strongest showing we've had in employment in this whole year. To some extent, there is a seasonal effect in the sense that as we head up to the year-end peak of retail activity, many of the sectors that support retail, like food manufacturing, transport and logistics, etc., have been growing employment. Much of that employment is involved in temporary workers because of its seasonal nature. So it remains to be seen whether employment will continue to gather momentum over the next few months. I think for now, it's safe to say that the November result is a flash in the pan, and we'll have to seek confirmation from the next few months that employment is in fact rising sustainably.
Loane, if you take out the seasonal factor and you take out the temporary jobs, there's still been jobs growth, presumably. Can you put your finger on why? Because we've had some fairly anemic pieces of economic data coming out, notably GDP growth at 1.2% and PMI still mired below 50. So who's creating these jobs?
Most of the jobs growth is in retail and wholesale trade and in financial services. For most of this year, the government sector was the biggest creator of jobs, or so-called creator of jobs, but they've taken a back seat lately. So the tertiary sectors, the services sectors, are doing relatively well. And I think that the sign from this data is that the consumer's in better shape than most people appreciate. Certainly retail and wholesale trade employment has grown dramatically. There are tremendous sectoral shifts underway in South Africa. If we look at agricultural employment over the last year, a decade rather, it's fallen from 1.8 million to just 600,000. If we look at mining employment over the same decade, it's fallen from 1.4 million to just 500,000. So there are dramatic declines in agriculture, mining and the other primary sectors of the economy, but there is a terrific take-up of employment in the services sectors of the economy. So South Africa's migration from an old primary agricultural and mining economy is now substantially complete. And the financial services and retail sectors are very strong.
The services sector, as you highlighted, supported by the consumer. Are you surprised at the health of the consumer, given the kind of numbers or the kind of jobs lost we've seen in the primary sectors of the economy? And just how worrying a scenario does this set up for the road ahead?
Well, the consumer is very surprisingly buoyant. I don't think that anybody understands fully why the consumer is so buoyant. But if we look at various indicators, obviously retail sales growth has been growing strongly. If we look at motor vehicle sales, they've been growing strongly. We look at the money supply, the narrow money supply of the Reserve Bank, that's growing very rapidly. So all of the factors that normally are indicators of consumer activity are very strong. So I suppose it would be surprising, particularly going into retail's most important sector period of the year, if we didn't see a strong growth of especially sales workers. This is where most of the growth is occurring in financial services and retail, is sales forces being utilized in innovative ways. Field sales is growing as a phenomenon in South Africa, selling financial products, retail products, and increasingly, of course, there is a link between the two of retail companies providing financial services. So yes, I think the consumer is surprisingly buoyant. There are many headwinds for the consumer, but for much of the last year, we've had the consumer sectors raising employment.
Loane, let's have a look at the first 3 months of next year, for example. Let's say that what you've been speaking about results in some of those jobs that have been created in the retail sector being shed. Let's say that the mining and manufacturing sector in those same 3 months starts to stabilise, as people are suggesting it will, and takes up all the slack, for example. And let's say that the 3 months of 112,473 jobs created is replicated over the whole of 2013. That's about 450,000 jobs a year, I think, if my maths is right. And that's just about enough to absorb all the new entrants into the job market over a yearly period.
Yeah, well, I mean, that's the important point you've made, is that even if we have staggering growth of 500 or 600,000 jobs, that's just enough to absorb the school leavers leaving secondary schools at the end of this year. So I can't see any meaningful reduction in South Africa's unemployment rate. There are incredible and very strong headwinds for the labour market. There is a raft of new labour laws going to be introduced over the next 6 months. I'm sure that employers are going to be cautious about the effects that those labour laws will have. Just to remind you, some of the extraordinary things that will be introduced as labour laws include new government-operated recruitment centres. Companies in South Africa will be required to register vacancies they have with the government within 14 days, and they will be required to receive and evaluate all the candidates that government sends to them. Now, just to give you an example, at Adcorp, when we did 1,000 recruitment for a large oil company last year, we received 600,000 applications. So it's not clear how these government-operated recruitment centres are going to work, but they will become law in March. Something else that is very dramatic from a labour law point of view is that companies will now face turnover fines between 2% of turnover for a first offence up to 10% for a repeat offence for failing to meet certain affirmative action targets. These labour law reforms have not really made news, but they are significant, and they're coming down the pipeline in just a few months.